Good evening, everyone. Welcome to another edition of Moffat on Money. The gang's all here. Just another Saturday night, basically. Another Saturday night. I ain't got nobody. I tell you what, I'll give a free subscription to the first one to name that tune and the singer. What you got?
I can sing it, but I can't.
Voice? I love that song. It has some great lines in it. But
Saturday night and I ain't got nobody. I got some money because I just got paid. How I wish I had someone to
Sam
talk to.
Cooke, Anonymous. Good job.
Hey, Anonymous.
You win the free subscription.
To what?
Congratulations to the channel. We're a small channel. We got to start off humbly.
How about this? You'll get a free membership once we actually
Start having memberships.
Mm-hmm.
We'll do that. And I mean, that's kind of the cool thing about this show and finance in general. It involves all areas of life, the arts, culture, religion, economics. It touches on everything. So there's your bit of culture for the night. Sam Cooke. It's another Saturday night. Tonight we're going to hit up a few interesting things in the world.
Hang on. Wait. Hey, everybody. How y'all doing? Hey, Brentwood Chick, but not a mouse. Hey, Viking. I have cues. Hope everyone's doing well.
Ellen is my physical manifestation of manners. She keeps me honest. I'm sitting here thinking of all the different things going on in the world and forgetting my manners, which humble apologies. That's why Ellen is the co-host. She keeps me honest.
Somebody's got to. I hope my
Good evening,
sound
Brentwood.
is better this week. We did a whole got a boom and a cover, and because I was listening to last week's, and I sounded like a little bit echoey and strange. Carrie Berry's mom. Hey, honey.
Yeah, you may want to pull the mic a little bit closer to you as well, just to strengthen the sound. But it's a lot clearer than it was last week. So we keep working on the technical side of things. I also want to thank Viking Wolf by Blood for being our moderator again tonight. It is our pleasure to have her take care of some of those duties for us. And good to see, the family reassembling on another Saturday night here. Appreciate y'all coming. Appreciate your support. Appreciate your encouragement. Can I go now?
Huh?
Ellen, can I go now?
Yes, you are allowed to go.
I suck at the social graces. Let's just be honest. My sister got all of that in the bloodline. She's great at it. It's not my natural forte. I have my gifts. The social graces aren't necessarily one of them. But tonight,
we're working on it.
We're
getting there.
My daughter worked on it for 20 years. She left me, and Ellen has kind of taken up the mantle in that regard. Still a fair amount of work to do.
Yes, there is.
The week has been an interesting one. Thinking about some of the failures, some of the successful failures. And I love that term. It's kind of an oxymoron. Successful failures. It's like jumbo shrimp, but I digress. But some of these are like people do things intending to fail and take others down with them. I think that's really part of the attraction to FTX, in that there was so much going wrong. They couldn't have done a worse job if they tried. Amazingly, it still grew through the wazoo. but obviously ended up collapsing all around them and taking a lot of people with them, hurting a lot of people in the process who trusted them. We've talked about that repeatedly. So tonight we're going to take a look at another successful failure, Enron. We have a few fans of Enron. A couple of people have expressed some interest in Enron or were possibly involved in Enron when it went down. So we're going to look at that. Successful failures tonight. I have Enron happened when I was studying accounting and economics. I'm interested in revisiting it after all this time. We're going to do that in style. And if you've got anything that you remember from your classes or talking about it, would love to know. Hear your input. First things, a few interesting, other interesting things going on this week. Just a few notes. Most of us are on Twitter. We use Twitter for announcements, news releases, kind of brief little comments here and there. And in an unusual move this week, Elon Musk, the well-known, hired a new CEO.
For which company? For Twitter?
For Twitter, to run Twitter. She's from NBC, has been handling their marketing, and she is also an official or executive of the WEF, World Economic Forum. We've talked about the Great Reset previously. So, the question has been asked and raging on Twitter. What does this mean for Twitter's new free speech platform?
Well, let me say real quick, if you haven't, Clay has got 3 videos on the Great Reset. If you haven't seen them, go back and check them out. And all the things are on there. Sorry, go ahead.
No, that's fine. So is the new free speech approach set to become the old free speech approach? There's some, kind of interesting debate on it. And I captured some of these images, and this is, I like Elon. I think he's brilliant. I think he's a hard worker. I think he can be extremely focused in accomplishing his goals. I admire that. Another thing I admire is that he's not bashful in his opinions. Not that I agree with him on everything, but he's also willing to listen to others and even change his opinions. Now, some people have been, passing this kind of blurb around, just kind of a sample of what I've seen, where Elon was supporting carbon tax, universal basic income. Now, universal basic income is where the government pays everybody a certain base amount a month. And we may talk about that some evening, along with some other programs. That might be an interesting night. Elon also in the past supported the mRNA, the vaccine injections, COVID vaccines specifically, in his words. The science is unequivocal. He also has support and has a financial interest in a company that's developing a neural network to kind of attach to the brain and help humans achieve higher performance mentally. In that last little quote, he talks about creating a neural lace is the thing that really matters for humanity to achieve symbiosis with machines. Now, that's kind of the old Elon. More recently, Elon has obviously changed his opinion on a few things. WEF is increasingly becoming an unelected world government that the people never asked for and don't want. Now, remember, years ago, Elon attended WEF Forum, the Davos meetings. Started out kind of as a supporter, but has turned into a modestly ardent opponent. December 22, I was invited to WEF but declined. Elon, May 23, trust nothing, not even nothing. He talks about the WEF master the future. That doesn't sound ominous at all, does it? Are they trying to be the boss of Earth, everything on the Earth? I guess there's value to having mixed government and commercial form of some kind. WF does kind of give me the willies, though. So, interesting guy. Not sure, what's going to happen with Twitter's new CEO. Elon has asked basically, for everybody, because there's obviously been a ton of objection or concerns expressed. He said, give her a chance. So that's kind of a, perspective on that. If we look at other things on the market, looking at the federal H8 report, bank outflows continue. Bank deposits are still shrinking as people flee small banks, larger banks. Got one of the Fed governors this week. Bowman also stated the Fed may not be done hiking rates. We talked about that earlier this week. Inflation very well could tick up again. We've seen information where the rice crops in Southeast Asia, Thailand, are shrinking due to some policies, due to drought. The wheat corn crop in the Midwest is experiencing the worst drought since the Dust Bowl in the 20s. Cattle stocks are down 4%. None of that bodes well for food cost and inflation in the future. So there's still concern that inflation can tick back up. So there's a couple things going on in the market that still have us being cautious about any future prospects or projections. The market actually has been in a holding pattern since the beginning of the year. Bounced up, bounced down, bounced up, but it's still about where it began the year. It's been relatively boring, honestly. The problem with that is that oftentimes before the market makes a big move, it gets very boring. So just a word of caution. I see Anonymous. Twitter has been blackballed by advertisers. The hiring of the NBC exec is a concession to that market. He's stretched to buy Twitter and needs to have positive cash flow. And that's a strong reason to hire her. We'll see what actual policies, she implements, or if she pursues his free speech pattern, or if she's more interested in returning Twitter to the Twitter of old. I have cues. I appreciate he acknowledges that he might make mistakes and is willing to correct the course as he discovers them. It's my impression he wants to focus on other stuff. That's a strength of Elon's and a weakness of Elon's. He has an intense focus for a little while, but then he wants to do something else. He's a very active guy. We just talked about the market getting bored. I can't say Elon actually gets bored, but I think he likes handling the technical details. He describes himself as an engineer rather than an administrator or politician. And so once he gets the technical details of stuff worked out, he's happy and he's ready to move on. And I think that's really what he's doing with Twitter. He's, got it up, set and running as far as the technical aspects and execution of it the way he wants. And he feels comfortable turning over the day-to-day administration and marketing to somebody else. So we'll see how that goes for him. I'm kind of a fan of his. I like his innovation. I like his drive. He makes generally good products. He's had hella success with SpaceX. Done what a lot of people said he couldn't. He just drives things until they work. All right. Well, that's a little bit about some of the interesting things going on in the world. So let's talk about Enron, the well-known. Enron is really our second financial failure. We talked about FTX a number of times. We don't even know the depth of it all. The investigation is still ongoing. We have some degree of the depravity of it, but there's probably still a lot more to come. Like I said, a couple weeks ago, the trial begins in October, and it will likely be juicy. It'll be a great boon for the law tube folks, and probably be kind of fun and interesting to watch.
Maybe they'll invite you on one.
Well, we'll see. But they're good guys, and they've been very gracious and helpful to us so far. Law and Lumber, Ian Runkle
of the Bailey.
I always just want to call him Ian, but they've been very helpful and encouraging of this channel, and we are very appreciative of that. FTX, let me back up a little bit, I guess. We're covering financial failures. One, because people like car wrecks. You just got to stop and see what all happened and whatever. So wrecks are interesting by nature. There's just something in the human condition that finds it fascinating, particularly when there's so much controversy and money involved, so much press. I mean, they write books on this stuff. But the reason I'm covering them is because I think there are things to learn, little clues that we can look at that as investors and finance people can make us cautious about how we approach certain investments. FTX, for example, was feted in the press and political circles. It was widely acclaimed by most everybody who was surrounding it as a bold and fabulous, having a bold and fabulous future. Most everyone was just effusive in their praise for it. It was celebrated by all who knew anything about it or talked about it publicly. You had huge funds like Sequoia and BlackRock pouring hundreds of millions of dollars into it. IMG, a big athletic agency, put millions in it. Tom and Giselle put in, I don't know the exact amount. I've seen estimates from 50 to 400 million. It's probably, don't know exactly when they bought the stock. I did find the exact number of shares they bought, but couldn't find the exact times when they bought it. So, anything in between. Robert Kraft, the owner of the New England Patriots, Kraft Air. He doesn't have any much hair, but anyway, he put in close to $100 million. So tons of quote unquote knowledgeable, well-informed people threw tons of money at it. What makes people do that? What were they not seeing? Well, that's kind of why I want to talk about financial failures. Now, today we're going to look at Enron, who incidentally was overseen by the same John Ray who's administering FTX's bankruptcy. Couldn't find a better administrator. The guy has more experience than everybody else combined. And he's just about as straightforward and straight-laced as they come. No, not a whole lot of pretension or condescending approach or attitude by this guy. If this channel was a little bigger, what I would love to do is try to contact him and see about getting him on the show. I think that would be an epic night. But we ain't there yet. Maybe next week, but we ain't there yet. But let's go back. Go back in time to about 22 years ago when Enron was at its heyday. It collapsed on December the 2nd, 2001. It was possibly the biggest dollar-wise collapse or bankruptcy ever, and one of the most shocking. Now let's go back a little further, 16 years further, 1985, when Ken Lay took over as the president of Houston Gas. Interestingly, the company, Houston Gas, that he took over was already embroiled in fraud, with one of its oil traders making very consistent abnormal returns above what one would expect from somebody investing in that position. Does Bernie Madoff ring a bell? The guy
Ding,
was
ding.
claiming to have, do what?
Ding, ding.
Ding,
It
ding.
rings a bell.
The guy was claiming to have 40% returns a year consistently, when everybody else, the brightest of the bright, weren't. That in and of itself ought to be a huge red flag. Well, the president of the trading division was a guy named Louis Bourget, who was enjoying these returns by opening unauthorized foreign bank accounts. We're going to call them SPVs, special purpose vehicles. So I may refer to SPV or SPE, special purpose entities. They're the same. They're just a legal construction, a shell company, which also has been in the news a little bit. It's just a corporation that's established with no real assets, no real management, and just is a way to, let's say, process money or assets for
Like money
Enron.
laundering.
The advantage, money laundering, is possibly one purpose for them, to conceal the source of money, to conceal the assets. And that's what Enron was using them for. So it allowed Bourget to engage in unauthorized transactions. And remember, this was in 86. You had the greatest bull market in the history of the country raging. But there was initial concern that Bourget was skimming from corporate accounts as well. So once they got, wind or a hint of that, they started the company, Houston Gas, Enron, started investigating him. And they found out what it actually involved was he was twinning trades in order to move profits from one period to another. So he would have paper trades, offsetting trades, and he would time the losses and then the receipts of gains from various quarters, reporting quarters, to other quarters. It's kind of an accounting trick. It's kind of an illegal accounting trick, but it enabled him to report higher profits by hiding some of the losses and then claiming some of the income in quarters when he didn't do that well. So these profits were important to Enron, to the young fledgling Enron. It was experiencing a new market. There had been deregulation in the natural gas market, so there was increasing competition that cut Enron's profits. When you receive part of your compensation as a bonus based on your corporate profits, you really, really hate to see that. And eventually, but Bourget's magic tricks kind of caught up to him. And the positions started losing money. So at that point, Bourget and the other traders were fired. Now, Enron was saved from bankruptcy, and this is 87, 88. So Enron at its very birth was based on fraud and basically barely escaped fraud by bluffing the market on its losses in trading activity, and it prevented a margin call. It lied and hid some of its losses in some of these SPVs and bluffed the market that it still was, financially solvent, still in good operating condition. So that's the birth really of Enron. And that pales in comparison to the full-blown Enron. The best is yet to come. Now, Lay hired a guy by the name of Jeff Skilling. Interestingly, Jeff Skilling was a consultant with Arthur Andersen, who was advising Enron on how to set up its trading desk. It's to establish natural gas forwards. A forward and a future is essentially the same thing. It's just an agreement now to do a deal in the future at a price set today. So if I want to sell somebody 1 million cubic feet of natural gas in December, we can enter into a contract, set the price today, and then in December, I'll deliver the gas and receive that amount. That's a forward or a future. Okay. It's the way a lot of people will hedge their bets. They'll try to lock in a price at which they can make a profit. Now, if the price rises between now and December, there's quote unquote a loss because you could have gotten even more. However, the offset is if prices decline, you still get that same price that you negotiated today. So that gives you a profit, but it's a way to lock in a profit that you can live with or that you enjoy as a seller. Now, Skilling, interestingly, agreed to take the position on the condition that Enron use something called mark-to-market accounting. And mark-to-market accounting is where you just value assets, positions, trades, contractual deals at their quote unquote fair market value at the time it's received, executed, or currently on the books. And a lot of companies have done this, but the problem with Enron was that the way they defined value was pretty much based on their whimsy. Now, they received they had to apply to SEC to change their accounting process. The SEC approved. And this transition allowed Enron to take assets that were on the books at book value, basically what they paid for them, less depreciation, and re-record them at market value. So if they had an oil rig that they spent, I don't know, let's say $500,000 building, or a natural gas pipeline or whatever, once it was working and profitable, that rig all of a sudden was worth millions. So they then recorded that asset at the millions value and marked up the difference as profit, regardless of the actual cash flows. So it made Enron look hugely profitable quickly. The accounting technique allowed it to write off immediate gains from unrealized profits in current trading positions. So they might buy a stock or a forward or whatever, the market goes up, boom, they don't sell it, they don't liquidate it, but they go ahead and record that interest in that difference in price as profit. So voila, you've got immediate profits on a number of positions and positions, into the future. So they quote unquote were making soaring profits in trading. And this kind of moved Enron from a staid, boring energy company to a more sexy, flashy trading firm. Enron was hugely profitable, even though people weren't carefully looking at the source of those profits. That's why I oftentimes say I'm not a bottom line guy, because you don't need much of an education to look at the bottom line. So a third grader can look at the bottom line and tell whether it's black or red. No big deal. The big key is in understanding how that bottom line is changed, altered, what influences, those kind of things. That's where you make your money in this business. Now, also as of additional interest is Skilling implemented some other firm changes. And I thought some of these were kind of modestly amusing. For example, he established a review committee that graded and fired employees. He fired the bottom 15% in ranking every year. No matter how good you were, if you were in the bottom 15 or ranked in the bottom 15, you were fired. The employees came to call that became it's hard for me to talk. The employees came to call this policy Rank and Yank. I love the name. I have cues. This is why you research company accounting practice and SEC filings on Edgar. Everybody I say everybody should. Most people don't know what to make of it. And that's where you get into some of the beginner investing kind of risk versus an advanced investor or somebody who's sophisticated in accounting and financial practices. So I'm actually thinking of shooting and we talked about this some for how to begin investing, actually thinking of shooting a separate video on beginning investing, title it How Not to Buy Stocks. I was looking at a lot of the videos on YouTube and there's a bunch of them out there. How to buy stocks, buying stocks as a beginner. Well, I'm going to do one on how not to buy stocks. New tricks. What is Edgar? Edgar is the SEC database of corporate financial reports. Companies have to file an annual financial report that includes their income statement, the balance sheet, statement of cash flows. It has all the detailed accounting notes, disclosures, that kind of thing. They also have to file quarterly reports, 10Qs, 10Ks, those kind of things. So Edgar contains all the filings. You can go in and search for a specific company and then it lists all the different filings. And you can go through those filings, which are technical, boring. I run a challenge team, CFA challenge team for the school. And, we work with these kids going through Edgar a bunch and tearing apart these reports and notices and looking at the fine print. It's yeoman's work. You've got to be committed and detailed. And it's really tough, I think, for an individual investor to go through and analyze that kind of information to buy a stock. Fundamentally, buying a stock is not hard. Most anybody can buy good stocks. The difficult part is knowing when to sell them. And
I'm gonna pause right there for a second. So Clay does the CFA team. He runs a team for UNCW in North Carolina. And what they do basically is the schools across the state, and this is just my basic understanding of it from what Clay has told me. They are given a company that may be in trouble or needs some help or just have some issues. And these teams across the state go through all their financials and the business and everything going on, and they come up with a solution. And they compete every year, and it's a different team evaluation. And it's a different team every year for each school because, it's usually just juniors and seniors. Is that right?
Yes.
Okay. And and then Clay has made it to the States about, if not every single year that you've been ahead of it. Is that correct?
Yeah, we made it in the Final Four to the States. And I'm going to brag on my guys this year. They should have won. They were the best team by far. And I kid you not. There were certain reasons beyond our control that we didn't. We placed second. But afterward, I had one of the judges come up and apologize to me. And I had different people in the audience come up to us, myself and the whole team, and say, we should have won. So I can be biased, but I can still be honest. We were the best.
Can I just say a little bit of why? Not the big reason, but just...
Let's just leave it at that.
Okay.
It
wasn't right. It's a little political, and it was wrong.
Yeah. We, you can't control everything in this life. And that's a good lesson for the kids. Sometimes being the best doesn't yield the win, but you go home and you sleep well. You did the best you could. Some things are just beyond your control.
But those boys worked so hard and they did so well.
Yeah. We had a team of 7 people, and they probably put in each 300 to 400 hours. We actually start in the summer training them, and then in the fall work a sample company. And then November, December, January, we get the real company and have to submit an 11-page report. And then if you make it to the Final Four, you give a live defense and Q&A period. So it's, we go up against some of the best schools in the country, and just really proud of my guys. They worked very, very hard, and they did well. They did extremely well. Enron, skilling.
Sorry.
No, you're fine. Oh, Brentwood Chick has a comment. Yes, please record that. Basic investing or beginning investing. How not to buy stocks. If y'all think of a better title, let me know. And I see I have states I'm an info junkie. I kind of am too, and I enjoy that. But being in finance, being a professor, I have time and opportunity to do a lot of this kind of digging. And that's one reason why we do this video. I use some of that in order to help give you concise information. I hope it helps. I think being somewhat informed hopefully will help everyone make better decisions. And that's the goal.
And that's one of the reasons that I asked you to start this channel, is that you have all this finance information and all of this experience with the markets and investing. And I said, why not share it with everyone? Why keep it to yourself and your students?
Yeah, by experience, she means having my face kicked in a bunch, as you can tell.
Pain is a great educator.
Pain is a great educator. Extreme pain is an extremely good educator.
True.
All right, now skilling. So he created this rank and yank committee. It actually created a rather Darwinian environment. When you talk about survival of the fittest. Enron became kind of like a cutthroat work environment. Another interesting thing Skilling did was he hired two lieutenants to go around and enforce this, to handle the evaluation, to oversee the evaluation committees, and to handle the hatchet jobs. He hired J. Clifford Baxter, who was a manic depressive, and Lou Pye, who was going through a divorce, and who every night would go to a strip club.
Wait, so both of these men were pretty much miserable human beings?
Pretty much.
Gotcha.
And their main joy in life was inflicting
Firing
misery
people.
on others.
There you go.
And so, can you imagine a work environment like this? I don't know if I could call it hostile, if that really adequately describes it enough. But
talk about anxiety and walking on eggshells all the time.
Yeah, well, these practices, this approach and mentality encouraged everyone in the company, every manager, to have an obsession with short-term earnings and deals, regardless of the long-term implications or the quality of cash flows. Anything that they could do to create a cash flow, real or imagined, was encouraged. There was just the whole environment of the company. Remember, I talked about how, people do things that seem like they want to fail, that ultimately they want things to collapse around them. I don't know what else to call it. Honestly, don't.
I think it's just bad management.
Yeah, it's just, how long do they think they can get away with this? How long do they think this kind of crap will hold up? And do they think that the market will never go against them? Well, okay, short-term focus, rank and yank. He's got a couple of sociopaths for lieutenants. So interesting environment. But it wasn't enough. It wasn't enough just to massage the income. Skilling hated the losses. Remember, I talked about how if a manager gets his main part of his compensation based on the performance of the company, whether it's short-term or long-term, short-term. Well, there's two sides to the income statement. There's the income side, there's the expense side. Well, Skilling hated losses and the problems as much as he loved the income. So we mentioned a little earlier about special purpose entities or special purpose vehicles, SPVs, SPEs. These are essentially limited partnerships or companies created with outside companies or individuals. Now, Enron, Skilling per se, used the SPEs to, he basically used them as garbage dumps. Any troubled asset, any problem income stream, he dumped in an SPV. He transferred those assets, which meant they didn't have to show up on Enron's books. So he made the losses disappear, at least on paper. It was nothing but sleight of hand and accounting mysticism. Well, the crowds roared their approval as the stock price continued to rise. Viking Wolf, cutthroat, dog eat dog, which do what you need to do to make your money and numbers. Been there, done that as an insurance agent. You're only as good as your last month. I've seen some shady crap happen. You know, it's very possible for companies to build that environment. And unfortunately, there's some people that do. And as an investor, you need to be aware of that.
That was my last career. And I got shit canned for the same. Because I refused to sell people on fixed incomes insurance that they did not need.
Yeah. There is, you know, the caveat emptor, let the buyer beware. That's cold. But there is the understanding, the knowledge that there are evil people out there who are willing. And when I was a trader, I saw some of them, you know, some of the salesmen on the trading floor, they would be selling one derivative to one individual. We generally sold to banks, community banks, regional banks. And they would take this, something like an inverse floater, which very few people understand. And the bank might have a certain risk or exposure to interest rate movements. Well, they would take it and sell it to them as a way to hedge their risk. Well, the very next call, they'd be talking to another bank that had the opposite risk, and they'd still be pitching it to them as a way to hedge their risk. They were willing to say or do anything to get the sale. You know, they would have sold their mother off to the cat house if they had a way. There are people like that out there. You have got to be aware of that risk. And hopefully this channel will give you information and ways to try to avoid some of that. Now, so Skilling put some of the troubled assets in the SPVs and got them off Enron's books. So if you can't increase income anymore, but you can decrease losses, you have more profits. How cool is that? The crowd certainly loved it in the market. Now, how did these SPEs work? It's really a simple idea. Like I said, you create an entity, a separate company, a new company, which all you have to do is go down to the Secretary of State's offices in the state and file incorporation papers. Okay. Then Enron would issue some stock, which they can do for free, zero cost. The stock prices were growing, so investors never really noticed or cared. So Enron would put some stock and capitalize these SPVs. The cost of the company was actually zero. The shares were then used as collateral for a loan to the SPV. So Enron would contribute nothing and receive cash. Or Enron could sell or transfer troubled assets to the SPV. The losses are gone. SPV has all the risk, even though it was ultimately controlled and capitalized by Enron. Now, if Enron couldn't transfer the asset, they could use the SPV to hedge it with stock in the SPV. The gain on the rising stock would offset the loss that occurred on their books with the troubled asset. So they have an asset they can't get rid of, or that would be too obvious to get rid of, but it's incurring losses. Well, you set up a fake shell company, throw stock in it, stock price goes up. Remember, they can mark that, they can use that gain as income. So the gain on that particular batch of stock offsets the loss generated by this division, this asset, this group, whatever. And so they could, quote unquote, hide the losses, hedge it. So Enron would also guarantee the value of the SPV. So banks and individuals felt more comfortable lending money to the SPV, aka Enron. Again, it was a paper transaction.
The value?
Pardon?
How can you guarantee the value?
Oh, they would take an asset worth $1 million and then guarantee the investors in that limited partnership, the SPV, against that asset going to zero.
Okay.
So Enron would just basically sign an agreement stating that the company's full faith and credit would back the value of that asset. Okay. Keep that in mind. Now, the immediate advantage to Enron is it's a paper transaction, didn't cost them anything, and the actual loss is gone. Now, none of this was illegal. Not one stitch of it was illegal. The illegal part came from Enron failing to disclose these transactions and the existence of the SPVs and its non-arm's length relationship to the SPVs, that it had funded it directly with its stock, that it guaranteed the value of the assets, and that it was recording the income from these on its books. Okay, all of that's illegal. Now, you've got several parties involved in this kind of chicanery. You've obviously got the CFO, a guy by the name of Fasto, who was the what do you call it when you have the strings, a marionette? What do you call the person moving the strings?
The puppet master.
The puppet master. Yeah, he was kind of the puppet master, but he was dancing with the auditor, the Arthur Anderson auditor, who gladly accepted Enron's representations and positions on all of these established accounting practices. Now, the partner handling Enron was a dude by the name of David Duncan. He was the guy who signed out, who ultimately, he was the Arthur Anderson partner who signed off on Enron's financial statements with a clean audit review. Now, a clean audit review is basically the accounting firm stating, based on its investigations and analysis of the books, that there were no, quote, material misstatements of fact.
Didn't they go down with Enron?
Yes, they did.
Sorry, didn't mean to spoiler alert.
No, that's fine. But Arthur Anderson was one of the big five, one of the largest, most prestigious accounting firms in the world. Mm-hmm. And they made this statement, Duncan gave them this clean audit when they were rife, absolutely chock full of fraud and misstatements. Why? What's the incentive? Well, Enron had Enron paid Arthur Andersen over $50 million a year in consulting fees, in addition to the accounting fees.
Wow.
That was nearly half. Now, remember, this was in the mid-90s. And this was nearly half of Arthur Andersen's consulting income, fee income for consulting. Not only that, Andersen was projecting it would rise to $100 million from Enron. So Andersen's accounting practices were
sketchy.
They were sketchy, not highly, tightly reviewed. I haven't, I don't even know about the individual auditors, what they were thinking about all this. Interestingly, also, each accounting firm has its practices reviewed by another top accounting firm. And during this time, Deloitte reviewed Arthur Andersen's processes and accepted all of them. Now, I don't know that they specifically saw or realized what was going on with Enron, but it's still all a kind of a big glad handing party.
I wonder if Deloitte even knew. Oh, sorry.
No, that's okay. How did the movement of all these values not show up in audits? Who says they didn't? Just because they didn't make it to the public release, you got to remember that some of the accountants and auditors of Arthur Andersen were convicted of burning documents, destroying documents related to Enron's audits. Now, the firm itself, there wasn't sufficient proof to show that all of the partners were aware of what was going on at Enron. And, as Anonymous says, Arthur Andersen was eventually cleared by the court. The charges were dismissed. But, in terms of David Duncan, the dude went to jail for, I want to say 10 years for his part in the scam. And that's really all it was a scam. Now, the 90s were a great time for Enron. It was hailed by all analysts, business managers, portfolio managers, etc. It survived the dot-com bubble. Now, if you remember the dot-com bubble, the internet just basically got started in let's say the mid-90s as far as a popular tool. And everybody and their brother thought it was going to be the wave of the future, how companies did business. So if you had a .com website, your stock went through the roof. I remember there were some companies like Global Crossings had a $220 a share stock valuation and was a company that didn't even exist. Didn't have income, didn't have sales, didn't have a product. AOL. How many of y'all remember AOL and trying to log in via the phone modem? Kids now think they have it so tough. They never had to deal with that. I've
got an interesting story about that, actually. When I lived in DC, it was in 1995, and I worked with a guy that his wife told him, she said, I took all of our money and invested it, all of it, in this company. And he's like, what? She's like, I took all of our retirement savings, all of our savings and everything. He was like, have you lost your mind? Well, it was Yahoo. Back when Yahoo barely existed, and they made a fortune. He owes his wife a debt of gratitude for that one.
Absolutely. Studies actually show women are better investors than men because testosterone's a bitch in investing. Men generally are more aggressive and more frequent traders. And this, according to studies, ends up giving them a lower return than women have, than females have. So when I get to that part of the class, all the guys get real silent, and you just see this big grin on all the girls' faces. But yeah, Yahoo, whoever was managing Yahoo at this time ought to be shot, because Yahoo could have been Google. And they just did not take advantage of it. They had the head start. They were the first. Everybody loved them, but they just didn't do anything with it. They're still out there.
Yeah. Luckily, my friend and his wife cashed out like shortly after they made all the money.
Yeah.
And they're set for life. So they were pretty happy.
I remember AOL got up to over $200, and then the .com bubble busted, and it was down at 6 again. Stayed there for the longest time. I don't know what it is now, but
I don't know.
You know, AOL was another company that had a head start on everybody and just didn't do squat with it.
I still have an AOL email address.
Do you still know what it is or password?
Yes, I do. I don't use it, but I have it. Just, I don't even know what. I send all my junk there.
Do they still run their mail servers? I haven't seen anybody with an AOL address in years. Do. That's funny.
That's me. I have one.
I had an
I will
old
never
friend
respond to anything.
Yeah. I had an old friend that had one, and I would laugh every time I would mail him something. I could still imagine him in the remotest parts of the world with trying to connect a phone modem and hear that tone, that whatever. Take you an hour to log on just to check an email. But he kept AOL.
Well, I mean, they got better.
They couldn't have gotten any worse. There was kind of only one direction to go, and they didn't go that far and fast. All right. Let me think. Enron. Now, .com, you know, Enron was a little bit ahead of the pack in that they created an online commodities trading website in 99, if I remember. Now, Enron, interestingly, was the counterparty to every trade. So if you went on and you wanted to buy some commodity, oil, gas, agricultural products, wheat, corn, etc., Enron would take the other side of the trade. So if you were buying corn, Enron would sell it to you. If you were buying oil, Enron would sell it to you, sell you the contract. If you were selling oil, Enron would buy the contract. So they kind of took the position as a market maker. They would buy and sell these commodities and keep the contracts on their shelf at like inventory. And then they would buy and sell out of that inventory. So kind of an interesting position. It's very possible to make money. You make money off the spread. You try not to make money on your positions because the market will move. So you always hedge your positions when you're trading or working as a market maker, because there's a difference in the price you buy and the price you sell. That's called the spread, a commission. Think of it as a commission. So the market maker makes a commission on every time you do an investment. That's how most of them make their living, is on this spread. But the actual stock, futures, options, whatever they have on their shelves, they keep pretty well hedged so that if prices move up, they're still net zero. If prices go down, they're still net zero, gains or losses.
Okay, let me ask to clarify that. So it's not like LIFO or FIFO. It's like, what did I buy this for? And what's going to make me the most money selling it if they're keeping it all on their shelves. Is that correct?
Right. Well, it's more like if you buy a stock of Apple, I don't know what Apple is now, 150. You've got that on your shelf. But if Apple drops, you lose money.
Right.
Because you have to turn around and sell it to somebody else who wants to buy it at 140. Mm-hmm. So what you do is if you buy that stock of Apple, you'll at the same time buy a put or sell a put, buy a put, sorry. Now, a put is an option contract that lets you profit if the price goes down. You make money if the price goes down.
Like
I see that screwed up nose. Think of it this way. The old adage is you buy low and sell high, right?
Yeah, so it's like your what's it called when you bet against a stock? A short.
Yes, it's a contract to short a stock.
Okay, thank you. That was
the old adage is you buy low and sell high. But there's nothing in that says the order you have to do it in. If Apple is at 150 and I think the price is going to drop, I can sell it to you at 150. And then later when it drops to 140, I buy it to deliver to you. So
okay.
I sell it at 150, I buy it at 140. I'm still buying low, selling high. The order is irrelevant.
Okay. That makes a little more sense than it's just sitting on the shelf and you can do it. I mean, that, okay.
Right. But a put allows
do y'all
you
understand that? Hang on.
To
do y'all
that.
understand?
Yeah, if I say something that doesn't make sense, y'all throw up questions, seriously. Even if I give an explanation and it doesn't make sense, you let me know. I'll find a way to try to explain it so it does. That's my responsibility. But you let me know if I say something that's doesn't make sense. So market makers will hedge their positions using various techniques. They don't want to normally make money on their position. They just want to make it on the activity, the spread. So Enron becomes a huge market maker on their own website. Now, later on that same time frame in 99, having to try to remember the years, Enron joined with Blockbuster. How many of you remember the well-known, much-loved Blockbuster in offering video on demand? Now, you talk about another company that blew it. They have all the videos, and they start offering video on demand, which is now called what? Netflix?
Well, they didn't offer that. They just offered videos you could rent.
Yeah, they would send it to you. But as soon as the internet developed enough bandwidth, I mean, that's just the natural progression. Did nothing with it.
Yeah. Be kind, rewind. Yeah, that's a thing. I remember those too, the VHS.
Yeah, I had actually forgotten about that, but as soon as I heard it, I was like, I can name that tune in one note.
And oh God, they would get so mad if you didn't. They would charge you in some places.
Now, good old Enron, as per their habit. Oh, wait, I've got a question here from Brentwood Chick. Did they think they and Arthur Andersen were too big to fail or something along those lines? I think they just enjoyed the income. Back then, too big to fail really wasn't a thing. People didn't think about it in those terms because companies had failed previously. It wasn't until the subprime crisis when we had a systemic failure. All these huge companies, AIG, Chase, et cetera, were failing or close to it. And that's when the Fed and the Treasury started stepping in to bail these companies out and buy their toxic assets. That's when too big to fail was born, at least the term. So I think that the Enron folks were just addicted to the money. It was just a high, seeing the kind of cash flows they were getting, kind of like the folks at FTX. Not a mouse. Another potential guest, Michael Lewis. Yeah, that would be on my bucket list as a channel host. He might have a book coming out regarding FTX. I'm 99% sure he's doing one. He was embedded there when it blew up. Go ahead and submit your interview request to his publisher. I probably need to at least get over 1,000 subscribers. So you all have your work cut out for you this week.
Like, subscribe, share, all the things.
Yeah, we're going to get there. But and I would love to be able to host some of these people or try to get them on. I think that would be just absolutely fascinating.
He had the opportunity to interview Madoff, because Madoff was in Butner, which is in North Carolina, right up the road a piece, about 2 hours. Is he still there? Is he gone or dead? Or I don't know. He died.
Yeah.
Oh, sorry.
Yeah. Waited a little
too
long. Yeah, waited a little too long. I think he actually got transferred from Butner before he died. I'll have to go back and check that. But he was definitely here when I first arrived. I found out.
He did.
And that's when I started thinking of going. But too much else was going on at the time, and I regret it. I would.
God, my uncle was there. He probably could have gotten you a pass in to see him. It's true.
Anonymous is about to lose his free subscription.
They may not let Clay back out of Butner. That could be true. I mean, that Clay is a solid guy. I will, if nothing else. He's irritating sometimes, but he's a solid guy.
I can be irritating as hell. Make no mistake. I freely admit it. I'd go up there and be doing my Johnny Cash impression. See how that went over. I do wear black. And our voices are very similar. Our voices are terribly similar. Johnny Cash is one of the few guys that I can do karaoke to.
Clay's karaoke tune is Tequila.
Yeah. If I ever lose a bet and I have to do karaoke, it's Tequila.
And also, Clay normally wears a black t-shirt and shorts to class with flip-flops, and usually kicks them off in class and just walks around barefoot. So, why not?
I had a student come in, was an honors student, and he was addressing the department. We had a reception for graduates. He was addressing the department. He was talking about how he knew he had the right major when his first day of class in his first finance course, the professor walked in wearing a t-shirt and shorts. The first thing he said was, "Stupid should hurt." Mm-hmm. And I thought, hey, I am influencing lives here. So I love my job. Greatest gig ever. Probably my greatest regret is I didn't start it sooner. Now, Enron, consistent, remember, Enron was, joined with Blockbuster to do this VOD. Enron was getting in the internet business. They wanted to jump on that. And as was their practice when they joined with Blockbuster in the video on demand, they started booking profits based on the expected growth of video on demand. Didn't have any income yet, but they were recording income. Remember that fair value thing, that mark-to-market thing? And mark-to-market actually is a legitimate practice, not the way Enron did it, but it can be a legitimate accounting technique. So that also, 99, 2000, caused profits to soar. At this point, Enron decided to pour hundreds of millions of dollars into high-speed networks. Started putting a lot of cash in it. Never got a lot of cash out of it, but that's another story. So the dot-com bubble for those of you that remember, crashed in late 99 and early 2000. Enron survived. Its stock price at the beginning of January 2000 was $43, a whopping $43, which was pretty good stock price, considering it had only been around for 10 years, started in the pennies. Its stock price hit a peak of $90 that August and September of 2000, all-time high. And as you may guess, it was only downhill from there. Enron started to crumble. The times changed rapidly for Enron. A lot of things started hitting at once. For example, Enron was implicated in the 2000-2001 California energy crisis. There was a period where energy prices in California tripled over a few months, short over a year. So if you had a $200 power bill, it was $600 by the end of the year. The implication or idea was that Enron was shutting down some of its power plants in California or using the energy from those plants to sell it out of state. That would force the supply of energy in California to drop. And supply and demand is always a law. It's always in effect. As supply drops, demand is constant, prices would rise. They would then buy the energy from the out-of-state entity that they sold it to and sell it in California for a higher price. Good old-fashioned ingenuity there. Well, part of it was just Enron's greed, ain't gonna lie. Part of it was they were working with a lot of the politicians and regulators there in the state to get some of this accomplished. The swap on that, swapping, selling on one hand, buying on the other, made Enron about $2 billion over a couple of years. Even better is that there were tape-recorded conversations released showing the joys of the traders as they realized these profits on these swaps, that their bonus was based on profits after all. So if you can do a paper transaction, take with one hand, give with the other, make a few million, what's not to enjoy about that? Well, obviously with a 300% increase in a very short period of time, people in California started raising a little hell. Probably understandable. And once public examination of everything began, started having all sorts of ongoing public debates. I mean, it even got into a pissing contest between President Bush and Governor Gray Davis, the governor of California. All of this ended up in Gray being recalled in 2003. It was only the second time a governor's ever been recalled in the country. Now, Enron had been implicated in some of this chaos, and Skilling blamed California's laws on much of the shortage, stating and I love this quote actually, on Frontline in 2001. Now, Frontline was a news show, which and I forget who was the news guy that headlined it, but he was a reasonably solid guy, did a good job. He would have guests on and then have a question and answer for an hour. But during Frontline on 2001, Skilling stated, "We are the good guys," talking about Enron. "We are the good guys. We're on the side of angels." I don't think I'll ever forget that comment. We're on the side of angels. How do you know a crook and a fraud when you see one? When they're claiming to be on the side of angels. A good man doesn't need to vouch for his own virtue. People see it, good. If they don't see it, that's not his problem. Now, admittedly, California's energy policies and regulators contributed to the mess. Gray, for example, had signed an agreement to provide energy at greatly inflated prices for years to come in the future. Gray was also very closely aligned with the energy companies. This is actually how Arnold Schwarzenegger came into office. Gray was recalled. They had a new election. Schwarzenegger won, which is still kind of fascinating to me. Another thing that hurt energy prices was the Democratic Senate imposed price controls. Anytime price controls in history have been imposed, supply drops. If supply drops, prices are going to rise. Black market or blackouts, you choose. There's also not going to be any new investment in energy in the state or country if there are price controls. I mean, would you want to start up a business with all the intended risk and expense and be told that your profit is going to be extremely limited and controlled? Probably not. So it was a combination of factors. Throw in Enron's duplicity and their fraud, and you hit the trifecta necessary for soaring energy prices. Now, remember, this was 2001 when all this was coming out. The pressure was increasing on Skilling, which made him defensive, very defensive, actually. At times in public, in earnings calls or in news reports, question and answers, he would be very defensive. Kind of a red flag there. In one earnings call, now an earnings call is a process where the company's executives, CFO, sometimes the president, few senior managers will be on the telephone talking to analysts from around the country. It was a precursor to Zoom. And on one of these earnings calls, Skilling was on there, and he called one of the major investors an asshole after the investor asked why Enron wasn't more transparent on its financials, wasn't as transparent as other companies. Skilling abruptly resigned shortly thereafter. You just don't do that on an earnings call. Lay took over, and that's when investors started selling the shares. Anonymous. Don't forget the tree huggers lobbying to shut down nuclear in California. You know, there's a lot of people working to decrease the energy supply. It seems like energy has become I can't think of the word, has become a kind of an evil entity. And that's really fascinating to me in terms of our future, because you cannot prosper without cheap energy. If energy becomes too expensive or becomes very expensive, it's harder to make, sell, to conduct business. Those costs have to be passed on, and that makes the business less competitive. Inflation, so to speak, fewer jobs. So some of the anti-energy policies to me are a little bit disconcerting. So 2001, Skilling resigns. Enron's taking heat for the California energy crisis. Lay took over. Investors start selling shares. Well, so people inside Enron are starting to, I think, get a little defensive or a little cautious. There was a whistleblower by the name of Sharon Watkins, who was one of the vice presidents. I don't know exactly what she found out when, but she discovered fraud, shock of shocks, and she went to Lay directly, warning of the company's imminent collapse if he didn't act immediately. Well, Lay did nothing. Just like in 87, he ignored the warnings. He felt like he could conceal it, fluff it over, cook the books a little bit more and bring everything back to quote unquote normal. Well, Watkins went on and informed the board of directors directly. The board of directors almost immediately fires the CFO Fasto after discovering he'd also embezzled at least about $30 million. This while he added $1 billion in debt to the company's balance sheet and removed $1 billion in shareholders' equity. He was the one that also ordered his accountants and Arthur Andersen's accountants to destroy records, which they did. So on October 21, Enron took about a $1.2 billion write-off. They publicly admitted, hey, we've made a number of bookkeeping errors. We might have overstated some profits. So far, we found that these total $1.2 billion. So we're going to take the loss. We're going to take the hit. The SEC announced an investigation the very next day. And this was in October. Early in November, Enron admitted that it had overstated income by nearly $600 million, $586 million, and had been doing it at least since 1997. Well, the stock collapsed. Remember, it reached a high of 90 and then started dropping. Well, remember, we talked about all those SPEs that Enron had guaranteed the value and had put stock in to collateralize the loans. Well, the value of this stock dropped. And as the value of the collateral dropped, the banks started calling the loans, which Enron didn't have the money to pay. So the stock collapse forced Enron into bankruptcy. So it filed for Chapter 11 on December the 2nd. Most of the employees lost their pensions because they had all the money invested in Enron stock. They lost their life savings. Investors lost at least $11 billion. The price went from $90 in August, September, to 26 cents in December, right before it declared bankruptcy. So a huge financial collapse. There was actually a book by Bethany McLean and Peter Elkin published, I think, in 2003 on Enron. And they had the perfect title, The Smartest Guys in the Room. And that's how the Enron guys, the executives, Lay, Skilling, Fasto, thought of themselves as the smartest guys in the room. Enron's collapse also had other effects, aftershocks. Obviously, Arthur Andersen went belly up. Dawson and some the auditors were convicted of destroying documents, allowing far too aggressive accounting policies. Arthur Andersen itself was dissolved. Nobody had confidence in it anymore. All of its clients started bailing. Fastow and his wife, you talk about screwing investors, it's one thing, but your own family, he and his wife pled guilty to 98 counts of fraud, money laundering, and insider trading. He was sentenced to 10 years. Now, his wife had most of the felony charges dismissed because she cooperated. Served, I think, 1 year for tax evasion, but was ruined afterwards. Lay and Skilling both were hit with a 65-page indictment. Skilling was convicted on 19 charges and sentenced to 24 years. Lay was convicted on 6 counts with a sentence of a maximum of 45 years, but he died before being sentenced. So he was convicted of charges. The possible sentence was up to 45 years, but he died before sentencing. His wife, Linda, sold 500,000 shares of Enron 30 minutes before the info that Enron was collapsing was released. She was never charged. So she made millions on the sale, but was never charged. 16 people pleaded guilty. 4 of them were Merrill Lynch employees who apparently had some information or insight into, the fraud on the Ford contract, some other things. There were 8 Enron executives that testified against Lay, Skilling, and Fasto. And probably, my opinion, the biggest consequence of it all is that Sarbanes-Oxley was born. Sarbanes-Oxley was, let me remember the numbers, I think a 64-page bill that introduced a number of regulations. Board must have a majority of independent directors, that is, directors not of individuals not directly associated with the company. The audit committee should be financially literate. So if they're overseeing the audits of the corporation, they should have, an accounting or strong finance background. And the board should hold sessions without management present to review or analyze management's performance or concerns about management. Now, Sarbanes-Oxley, I believe, was 65 pages long. I get it. And
Over here.
What was the other one confused or mixed up? Was it 2,000? I think it was 2,000 pages long. I think SOX was 2,000 pages long. And it, as of 1920, had created 12,000 pages of regulations. My numbers are fuzzy. This is just coming back to mind. I should have tried to research this a little bit, but Chunk will support me. My memory's not as horrible as it may be at times. Hey, Chunk, bite Mama's mic. Tell everybody, hey. Oh, he can hear me. So, but the compliance, the cost to companies complying with Sarbanes-Oxley is about $1 million a year on average, according to studies, which is a huge disincentive for a lot of companies to, go public or maintain public. A number of companies have gone private just to avoid some of the Sarbanes-Oxley's cost. And, some of the ideas of Sarbanes-Oxley were probably good. Much of it was making what was illegal even more illegal, which I think is a little silly, but it gives the politicians something to cheer about. But it ushered in a whole new wave of complexity and oversight in financial accounting, which there was already financial accounting regs and laws against lying, cheating, and stealing. Again, if I was king, things would be a whole lot simpler. You pay for what you buy, you deliver what you sell, you disclose everything material, and no lying, cheating, or stealing. If you don't know what any of that means, just stay out of the market. But instead, we have 64,000 pages of regulations, which, due to their complexity, a lot of people can get around. They'll meet the specific letter of the law, but so it's hard to charge them. That's how Bernie Madoff got along for 20 years without being charged or arrested. Everybody knew what he was doing. It had been reported to the SEC several times. Even had a couple of minor investigations. Nothing. So that's a little bit on Enron. It was a complete and utter disaster for everybody involved. Investors, employees, management. And, that's the thing about a successful business. There are almost always 3 parties involved. And there has to be an arrangement where it's a win-win-win position. If you enter into some agreement or contractual agreement, there's 3 parties involved. And if one of them ends up getting screwed or shortchanged, it's not a good thing. Something's going to blow up sooner or later. It has to be a win-win-win deal. Brentwood, why wasn't sure?
She.
Why wasn't she charged? Oh, Lay's wife?
Yes.
Don't know. Can't answer that. I would think that with her knowledge, information, the enjoyment of the illicit profits, her participation in it, the accompanying tax fraud, and then the obvious, I mean, she could have run around the streets butt naked, waving a red flag saying, "I insider traded," and couldn't have been any more obvious. But she should have been charged, my opinion. Yeah, Anonymous coming through with the save. Barney Frank's bill, Dodd-Frank. That was the other one I was thinking of. Dodd-Frank. Thank you, Anonymous. Ken Berry's mom. When I rule the world. You know, I honestly believe most of y'all could do a better job than what's being done.
I think Tallulah could do better.
You know, she's got a good heart. That counts for something. She's not very smart.
Does.
She's not very bright, but she's sweet.
Come on. She's got the biggest heart ever.
Anonymous. Do you dance like Pee Wee Herman? I don't even know how to answer that.
He just said it. I don't even know how to dance.
Yeah, I think I dance a little bit more like Wendy. You know?
Who?
Who's the goth chick that does the dance throwing her arms up? That would probably be me. Yeah, now I can ballroom dance.
I
can waltz with the best of them. But there's just not a whole lot of places to waltz. I used to could do some shag. But
I can shag.
I'm so rusty. Been a long time. I will plead the fifth on the rest of that.
However, he did bounce for a few.
Yeah, in my younger days, I bounced for Queen Latifah and Dave Matthews Band. So when I say that I've had my face kicked in, never doubt me. Had some interesting moments doing that. Brentwood Chick. I'm sorry, Anonymous to Brentwood Chick. Linda Lay later settled with the successor company of Enron and split some annuities that were purchased with stock sales funds.
Huh.
Trying to think. Split some annuities purchase. Oh, okay. She apparently took the proceeds of the sale, according to Anonymous, took the proceeds of the sale and bought some annuities. Annuities are where you will pay an insurance company a lump sum amount of money and then receive monthly payments for a certain fixed period of time. So she kind of guaranteed herself an income off of the Enron money.
If you qualify it time-wise, and there's lots of things.
Yeah. Depends on your age and how long you want the minimum guaranteed payments, all that kind of stuff for. But that's what an annuity is. It's just a regular stream of payments.
Clay, apparently I'm getting a reputation with my clumsiness. So I disappeared earlier.
There's more to this story.
No, because I didn't. I only tripped once over your bookcase. The other one, my laptop actually fell because Chunk tripped over the cord. But yeah.
We've got to figure out a way to make your setup chunk proof.
That's impossible. Probably Chunk.
He's struck
Mm-hmm.
twice.
He has. That was them bumping up against the desk. We got to figure this desk thing out. This is just,
Yeah.
it's bizarre.
Yeah, Chunk is a happy little bastard. He just
Yes,
is.
he is.
You can't get him down. You can't keep his spirit down. Now, Tallulah's a little bit more chill, but Chunk is just a bouncy, happy bastard. He's going to be all over the place.
Oh, come on. You're killing me, Anonymous.
Look
For
at
some
Brentwood.
reason.
Probably Chunk. If anything goes bang, it's probably Chunk. That's a pretty safe bet.
Yeah. Okay, so
What Anonymous said.
I can't show it because my taskbar is doing its thing where it won't go away.
Passive voice regarding laptop. Laptop didn't do nothing.
Laptop
just spitting facts.
Fell off the table. That was
Laptops
not a
just
triple.
don't fall, do they? Anonymous. There's usually some transference of energy.
It's called the chunk.
It's called the chunk.
I
like old chunk.
Here we go.
Anonymous. Annuities provide a barrier to assets being seized in some cases. I'll take your word for that. Not being as good of a lawyer as I ought to be. I don't want to swear to that because I'm not sure. I think they have to be put in a trust, but I won't swear to that. I know it's possible to
no
any cash generating asset that's in your name.
They can be actually transferred without a taxable penalty.
No, but they can. Anonymous is stating that they can't be seized in a lawsuit by courts.
That is true because it's considered a retirement. Kind of like they can't seize a 401k or your retirement benefits. They can? Oh, well,
yeah.
Shit. I didn't know that.
Yeah. If you invested in them with illegal proceeds, illegal funds.
Yeah, no, I'm not saying that.
And that's one thing that I would do different if I was king. I would, if a CEO committed fraud, knew about harm to the community, didn't stop it immediately, didn't announce it, disclose it, then I would seize his house, his retirement plans, his cars, everything. Utterly, completely ruin the guy. The board of directors, I would seize their assets, their savings, their retirement funds, their houses, wherever they lived, whatever they owned, for not doing their job in terms of oversight. I think if you do that to one, maybe two companies, you will virtually eliminate fraud and lack of oversight throughout the country. My opinion. But I think a lot of these regs would be relatively unnecessary if people were just held to their word, held to their responsibilities. Brentwood Chick, you have to tell Emily D. Baker about the Dave Matthews bouncing. Well, next time she has me on her show, I'll do it.
Yep. Next time. She hasn't, but yes, she's the biggest Dave Matthews fan.
Yeah, I actually have several drumsticks from the drummer that they would give me after the show.
I have not seen those.
Probably won't.
He has them hidden.
But yeah, so tell Emily if she wants to talk Dave Matthews one night to let me know.
He might even share a drumstick.
I could do that.
Okay. Let her know, Brentwood Chick.
OJ hid Anonymous. OJ hid pensions and assets from the Brown family. Yes, but they were hidden. They weren't legally protected. Let's see. Bankruptcy in Texas and Florida allows some nice exemptions. I think bankruptcy will. I'm not sure that fraud will. So if you use money obtained illegally, like with drugs, I think they can seize everything. But I won't swear to that. And it's very possible it could differ from state to state. And I don't know what the federal law is. It'd be interesting to have some of the Law 2 guys, talk about that some night. Because obviously this is going to impact FTX and Sam. He gave a lot of cash. He bought his parents a house in the Bahamas with FTX's money. Now, I haven't seen anything on that house being seized, but I think it should be. But I just don't know. I'm not comfortable enough to say that, what the law is. I try to be careful.
What about the
Brentwood Chick? I will share that. Thank you. Do really appreciate y'all's encouragements with some of this. We look forward to.
We do.
Anonymous. I hope bankruptcy discussions do not soon become really relevant. Amen. I'm expecting hard times. I just was listening to Stanley Druckenmiller the other day, gave a little video chat conference call kind of thing. And he was saying he expects a hard recession by the end of the year. Now, Stanley Druckenmiller is the premier investor over the past 20 or 30 years. This guy is kind of like the standard for portfolio managers. Just a plain common sense kind of guy. He's the guy that made George Soros billions before he left Soros. He now lives in Duquesne, Iowa. And the name of the investment fund is Duquesne Capital Management, or has several funds. But good guy, not pretentious, not arrogant, but just very thoughtful and a good common sense kind of investor. So, but he said he's expecting a hard landing, a significant recession probably at the end of the year. He doesn't want to give a firm time, but he thinks one is coming. I'm in the same boat, which, when would I not be in the same boat as Stanley Druckenmiller? It'd have to be pretty rare occasion. Because, down through the years, I've learned what he looks at, and got to admit, I've adapted some of the same things as some of the things I share here on this channel. What to consider, how to consider it, that kind of thing. New tricks. Do a crossover live stream with Ian and Rob. Maybe someday.
I think all of you should message them and tell them that you want to see them on there. See Clay on their channel.
Yeah, that's
my suggestion.
They're going to zip 50 emails to Ellen about all the spam email they're getting.
They'll be like, Ellen, what did you do this time?
Yeah, they're good guys. And, maybe someday if there's a commonality in some topic or issue. But have a lot of respect with them. We kind of got our start based off of Rob's, and many of y'all came to us from Rob's channel with he gave us a nice little plug one night. I think he saw something we did on FTX possibly, and gave us a nice little plug. So that helped, and we're deeply appreciative. We are small, we're young, been going since last August or September. Still learning, still growing. And we just, we love the time with y'all on Saturday nights. Y'all are a lot of fun. Make us smile.
Yeah.
Which is y'all's responsibility. That's y'all's job. Entertain me.
No, that's our job to entertain them.
It works both ways.
Oh, okay. Well, I guess the comments are pretty entertaining at times.
Yeah, I
will
mean,
give
it's what I tell my
the
students.
chat that.
You know, if they want to do really good in this class, they better give me something. Better entertain me, better impress me, or they better drop me.
Or give you scotch, which
Only after they graduate.
They do.
Won't take anything from them while they're still in class. But yeah, I had a honor student come up the other day, a guy that was actually on the challenge team, and he graduated with a 3.9, honor student, magna cum laude, and he brought me a nice little bottle of scotch, which was just extremely kind, extremely thoughtful, and deeply appreciated. He, I'm fortunate enough to stay in contact with a lot of my former students. When they come to town, we'll go out and grab a beer or a scotch. I really don't drink beer that much, but we'll have a scotch and or just get together for lunch, whatever their schedule allows. And I really appreciate them staying in touch. I do.
And we've gone to see them as well.
Yeah. I've gone to Charlotte, New York, a few cities, and have a group meeting and get a bunch of them to show up. And it's just the great joy of the job. It is. It's not that all students like me, which I find hard to believe, but nonetheless, I take some comfort in that.
Maddie loves you and hates you at the same time.
Yeah. I had one kid working at a hedge fund in New York. He graduated with a 3.9 also. He only had one B in his time at UNCW, and I was the B. I gave him the B, his only B, and so we still kind of laugh about that. But he's a good guy, and I think I'll stay in touch with these kids till the day I draw my last breath.
And Clay is a really good professor. His students actually do love him to death, but he is
all of them.
Well, the ones who don't want to be there to learn. Wait, can I finish my statement here? The ones who don't want to be there to learn, the ones that have to be there because they need it to graduate, probably aren't the most accepting of you. But the ones who really do want to learn and who come to your office and irritate you and really want to know what you have to teach, they love you to death. I mean, I could name off 10 right now.
Earlier I got called an asshole, and I freely admitted it. There are some times when the class as a whole might do poor on an exam, and I have been known to voice my honest thoughts on their efforts or the lack thereof, on my expectations and their failure to discipline themselves in order to achieve stated expectations. And I teach in a long building, and apparently some people on the far end of the hall have heard it. So I'm not bashful in what I expect of students. Some of them like that. Some of them don't. I don't necessarily try to please them all. And every day I'll go in and say, what's going on in the world? Most every day I'll go in and say, what's going on in the world? And we'll talk about current events and how they impact the market. And there's some opinion on that. And some of them don't agree with my opinion, which is fine. They don't get graded on whether they like my opinion or not. But when you have news events, if you're not thinking about its impact, how to interpret it, you're going to fail at investing. And that's why on this channel, I don't really hesitate to give my modest opinion. Not that it's always correct, but I think it's important for people to consider events and consider the significance and the extent of the impact of them. And to do that, you have to interpret them in some context. So that's, I want to encourage people to think. I want to help them gain better understanding. I want to help them enjoy this field and not see it as such a huge obstacle, because there's a lot of things it shucks down to the cob. Some practical realities. So that's kind of the goal. Anonymous. Keep plugging away. You never know what light a spark and what goes viral. Have fun and be positive. It can be discouraging fighting the YouTube algorithm. Well, y'all are a huge part of the making it fun and positive. And sometimes I don't think we give y'all enough credit. But, after the show, we will talk about y'all and how much we enjoy the interaction and camaraderie and just I refer to it as a family that we have kind of developed via the internet, via the YouTube. And y'all are great folks. And we are just really pleased to be with you.
I'm happy you're here.
Yes.
And if you really want to get Clay started on something, the English department hates him at UNCW.
Yeah,
his course is now writing intensive.
Yeah, so basically my students have to do a writing project. They turn it into me. I evaluate and comment on the writing. They have to make the adjustments, correct the errors. Yeah, I'm just not going to say much about that. But if I wanted to be a damn English professor, I would have been an English professor.
And, I love the use of emojis in a paper. That's like the best thing you can do.
Ask a former chair that if I was going to do their job, why wasn't I getting paid extra for it? Because I get students that can't, some of them just have extremely poor writing skills. And how the hell do you get through freshman English? I don't know. Don't get me started. Thank you, Ellen.
You're welcome.
So
someday we're going to have to.
I'm not bashful about it. I'm not bashful about it. If you graduate from college, you ought to have college level skills. End of story.
All of your students are juniors and seniors mostly. And some of them cannot make a complete sentence. Like it just doesn't happen. And it's funny when Clay brings the papers home and I kind of read through them and I'm just laughing. I'm like, how is this possible? How can this person, and why are there emojis? And what is going on with this paper? This is ridiculous. I don't know what they're teaching in school today, but it's not correct English.
Yeah, I tell, students that the two most important subjects they can take are English and math. Finance is generally a mathematically based function. But English and math, because math disciplines your mind in how to think and how to reason. Always an important and valuable skill. English, you can have the greatest ideas in the world, but if you can't effectively communicate them to others, they're worthless. So you'll never be in a bad position if you're a better communicator. Never. It doesn't matter what career you go into. The better you can communicate, the better you'll be able to do your job. Anonymous. They never read books or write anything longer than a text. They really don't. You talk about some of the great works in history, the great works that shaped civilization and caused a shift in thinking. They're completely oblivious to. They have no understanding or no idea that these kind of works even exist. They can't even sit down and read through them. The English is too complex for them. And that's sad. Now, most of my classes are electives, and I generally get very good students. But there are way too many out there who I believe the system has failed and allowed them to pass and continue to advance when they haven't earned that right. Brentwood Chick, now AI is going to be writing all the papers. You may be right.
Communication is going down the toilet. I mean, if you can't communicate with another human being face to face, I mean, that's one of the reasons that I'm here, so Clay can at least see a reaction to what he's saying. If you can't communicate with another human being, what is the world becoming? And then the meta universe or whatever. I just hope I'm dead before all that comes to fruition, because I don't get it.
Yeah, I worry about a world when computers become smarter and people become dumber.
Mm-hmm.
I just don't think that's a good trend, my opinion.
I think it's a terrible trend, and I think it is just, it's going to kill society. I mean, I have many thoughts. I won't express them, but
I mean, it's just not. It doesn't take a brainiac to see that trend, if it continues, will not inure to the benefit of the human race.
Nope.
To me, the things that I really value, like I work hard and I've got some nice things. They were expensive. The nice things in this life are expensive, but the really, really valuable things are free. But we have to be able to appreciate them. Can you take an approach to life where you just sit there holding a cup of coffee in the morning and you just say thanks for the taste and the savor of that flavor, for, watching the sunset, for the hugs from your daughter, from having a little dog that's so excited to see you that he knocks things over. These little joys of life that really make life worth living are generally free, and those are the best things. But they come through an appreciation and an understanding of things that maybe we experience or how we interpret them. And that comes through knowledge and wisdom. And I think we're losing a lot of that. We're losing a lot of the social graces. We're losing a lot of the ability of gratitude. We come to take these things as given. Our focus is more on being constantly entertained. Have some activity or something flashing, a TV or video game or something in front of us.
Some kind of screen.
Yeah.
If you really want to do something, there's a lot of those vertical things behind Clay. That tangible item, those books, which we have tons of in our house, you can't get rid of those. You can't destroy some major computer and those won't exist anymore. And it is knowledge, and it is power, and it's literature, and it is something everyone should cherish.
Yeah, I saw the other day where online they are taking great works and cleansing them of improper references or terminology or ideas even. And, it made me wonder, how easy, when you have to use a search engine where the results are pretty much predetermined, how easy will it be to find or obtain original works, the original ideas of the author, the artist, whatever. It's just becoming a different world. So, Anonymous, shut up with all this blather and send me my universal basic income check. Thanks, man. Check's in the mail. We love you.
All right, y'all. About time
on that
for us
note,
to sign off.
On that note, it is getting to be 9:00. and know a lot of y'all have, some sort of bedtimes. Now, some of the channels can go till the wee hours of the morning. Yeah, we
have to go to bed. We're old.
Yeah, we're
But
not there yet.
I do want to say one thing before we do sign off. All of you mothers out there of dogs or humans or anything, happy Mother's Day. I hope you have a wonderful one and enjoy it with your little ones. Be they
Absolutely.
canine, feline, bovine, swine, human, whatever. Enjoy it. And we love you. Thank you for
We
being
are
here.
extremely grateful for all the mothers out there and for all the non-mothers. So we love y'all. Appreciate it and hope y'all have a great night. We'll see
Bye,
you again
everybody.
soon. Thank you.